With go through some live mortgage rates, and we're going to talk about interest only DSCR loans for our deep dive topic for today. We'll wait just a few minutes here so we can go live on all the different platforms because we are streaming this on YouTube, Facebook, and LinkedIn. So give us just a moment here to go live. We did put the chat up on the screen, so everybody, as you tune in, feel free to drop a comment there. I see some comments already coming in there. Appreciate it. And we'll get started here momentarily. Great topic here for today that we do a lot of here at the Mortgage Calculator. So excited to share that information with everybody tuning in. Thank you for the comments that are pouring in there. Appreciate it. Now, as we go through here, feel free to keep dropping comments as you tune in, even after we get started. And also feel free to drop any questions you have as we go through the deep dive topic. But it looks like we are live on all the different platforms, so we can go ahead and get started. We'll take the chat off the screen, but please keep dropping comments there and questions. So welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by our president, Nick Hershey, and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And what we do on this show every morning is go through some live mortgage rates. And then we do a deep dive into a different loan topic every day. Today's deep dive topic is something we're very familiar with here at the Mortgage Calculator because we specialize in DSCR loans. And today we're going to talk about interest-only DSCR loans. Definitely an amazing tool to have in your tool belt as a loan officer when dealing with investor clients. So we'll do a deep dive topic into that later. Our sales manager, Jose, with 28 years of experience as a loan officer and a realtor, is going to take us through the interest-only DSCR loans a little bit later. But before we do that, we'll do what we do every morning, which is have Nick pull up our pricing tool and go through the actual live mortgage rates of today. So Nick, let's go ahead and pull up that pricing tool and see what the market is looking like today.
All right, let me switch my screen. We'll check it out. So this is our pricing tool for our team of mortgage professionals. This will show us the general rates and the APR for today. It is September 26th, just after 11 a.m. Eastern. So all the programs should be live here. If you'd like a full breakdown of all of the fees itemized that go into the APR, a full loan estimate, please get with one of our loan officers. We have over 400 licensed loan officers in 24 states for our primary and second homes. And we can do our topic for today, our business purpose DSCR loans, in 44 states. So pretty much everywhere. Now for the demos, as we do every day, we will set up a basic scenario so we can compare across the programs. We'll set up a loan amount of $400,000. We'll set the LTV to 80% loan, 20% down payment. Set the desired price to 99. That means we're going to ask the computer to find the best rate at one discount point in cost, typical request these days. And we'll compare our programs, conforming, conventional, and then we'll check out our FHA options. And then we'll go into our non-QM programs where we have over 5,000 additional options. We also offer VA and USDA. VA is only for eligible vets and active service members. If you are eligible, we can quote it in just a couple clicks. Let us know. And USDA is only for eligible properties. If you do happen to be shopping in a USDA area, let us know. We can quote it up, no problem. We will start today with conforming conventional. We'll do a purchase, 30-year fixed loan, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO credit score of 760 and an estimated debt-to-income ratio of 40%. So with these settings, let's check out the rates this morning. And not much relief from all of the news here. Still a little bit high, 7.499. 0.875 discount points in cost puts the final APR at 7.662. So we're still up there a little bit. So for our customers that need to use conventional, this is the best option today. But let's compare FHA. Usually if our customer doesn't qualify for conventional, the next option is FHA. So we'll set up the same exact scenario. We'll change the loan type to FHA. Everything else will be exactly the same, even though FHA does allow a little more credit leniency and a much higher debt to income ratio. we'll keep everything the same so we can compare apples to apples. So FHA went up a little bit from yesterday, it looks like. Best option here, 6.75, 0.67 discount points in cost. Final APR, 7.331. So still a little bit cheaper for our customer that qualifies for both. Definitely check out FHA because remember conventional was 7.6 something in the APR. Here we're about 0.3 cheaper, so a touch cheaper for FHA. And our customers that must use FHA, this does include the mortgage insurance, so definitely a good option for our borrowers that need the FHA. Now, where we love to specialize, if our customer doesn't qualify for either FHA or conventional, many other banks or lenders have to deny that customer, but that's where we have over 5,000 other loan programs that we can qualify with. So we'll set up the same scenario, ADLTV, and this time we'll use expanded guidelines, also known as non-QM. So everything else will stay the same. However, when we choose non-QM, we can choose alternative income. So full doc's what we use for conventional and FHA. That's 2 years of tax returns. So we would typically choose this to take advantage of something else, such as our asset-related programs, business bank statement programs. Our DSCR programs are only for investment properties. We'll talk about that in a minute. The most popular option by far, personal bank statement 12-month. And we have RSU stated, BOE, 1099, P&L, no income, CDFI, all kinds of options. Most popular for the demo, the personal bank statement 12-month, and that's for our self-employed borrowers. Many times it's our self-employed borrowers, when they submit 2 years of tax returns, will have various write-offs and may not qualify at all, or just may not quite get enough income using the standard methods to get the home they really want. So we will solve that problem for our borrowers here using no tax returns at all. Simply use their last 12 bank statements to determine a debt to income ratio using just the cash in the bank, no tax returns at all. Many times our self-employed borrowers qualify for double or triple the income and can therefore get the home they really want. So let's check out the non-QM solutions here using bank statements. So best option at the top, 7.5 rate, 3 discount points in cost, 7.633 APR. I think that's actually a touch cheaper than conventional today. So again, non-QM coming in right almost exactly the same price, if not a hair cheaper today. Definitely recommend all our borrowers out there check out non-QM. Typically it's a little bit higher, but in this market when conventional's going a little crazy, non-QM is very good option. So for our customers that must use it, very cool that it's actually cheaper today. For our customers that don't know about it and may qualify for conventional, you still might have some other advantages using a non-QM program. Now, you notice we have hundreds of different versions that use bank statements. Some of these at a little bit higher rates and costs may allow things like bankruptcies and foreclosures and other credit events, which would cause our borrower to otherwise not qualify. So not only can we use alternative income, we can get around many other issues as well using one of these hundreds of programs. So please, with our team, they will find the best option. And now before we go into Jose's deep dive into DSCR loans, we want to do some live pricing for investments as we do every day. So we'll switch up our last 2 examples to investment properties, set the same scenario up, ADLTV, 20% down payment, and we'll compare our 2 options for investments. We have conventional options, and we have our non-QM expanded guideline options. Remember, government programs, FHA, VA, USDA do not work for investments. So we'll start with conforming conventional. We'll keep everything else the same here. All we've done is edited the occupancy to investment. So let's see what the conventional programs have added for investments. And this isn't a conventional program. I don't know why that's showing up. Rates are so crazy that we have other programs showing up. But the best option here, 7.625 rate, 3.375 discount points in cost. Final APR, 7.871. So a good option for our customer that qualifies for conventional here. However, with the rates going crazy, you can see these discount points are just not realistic here. 3.375 discount points is $13,000, $13,500 in this example. That's a lot of money most of our customers, especially investors, would rather spend elsewhere. So there are some options here for conventional. Probably wouldn't recommend them. Most of our investors would like a little bit higher rate to reduce the discount point cost so we can find an option that fits better. Unfortunately, conventional doesn't have any options. that's where we check out our non-QM. So for the final demo, we'll set up investment property, and this time we'll go to expanded guidelines, also known as non-QM. For an investment property, the most popular option for income verification is going to be our investor DSCR program. That's because it doesn't require any income, no employment from the borrower. We simply use the estimated rental income from the property to determine a DSCR value, stands for debt service coverage ratio. If the estimated rents can cover the PITIA of the mortgage expenses, that is a ratio of 1 or higher, aka the property cash flows on a monthly basis. We even have options for ratios under 1.0, which would mean the property doesn't quite cash flow on a monthly basis. For the demo, we always use 1.5 as the highest value, so we can see all the options pop up. And the final thing is a prepayment penalty. We always set 3 years for our demo. We can choose 0. That will limit the amount of loan programs that show up and cost more. We can also choose 5 years if we want, but again, that will limit loan programs and it will save us a little bit of money. The most common is 3 years, so that's what we always use for our demo. So let's check out the DSCR options today. Best option at the top, 8.25 rate, 0.725 discount points and costs, puts the final APR 8.307. So good option here for our borrowers that need to use the DSCR options. Almost identical to conventional here. We have one option that was 7.9 almost, but most of the other options were in the 8s. So the DSCR options are obviously almost identical in cost today. And most importantly, we saved our discount points. So instead of $13,000 in this example, $2,900 is a lot less. Most investors, I'd say 90% or so, usually pick a DSCR program when comparing to a conventional program in this market. So definitely recommend all the investors check out the DSCR options. Now, as we scroll down, some of these may allow, as I said before, bankruptcies, foreclosures. Some of these may allow short-term rental income at a little bit higher rates and costs. A lot of different variations of these DSCR programs. So please get with our team to find the best one. And to segue into our topic for today, let me switch my screen. Some of those options that we see on the DSCR program do allow interest only, which is our topic for today. So interest only is a cool feature that we can add to a lot of non-QM loans, and it's a very popular feature that we often can add to the DSCR loan. So a lot of the options you saw there on the list, obviously we weren't quoting interest only, but if we did, some of the programs would not allow it, and some that do allow it would usually increase the cost of that program a little bit to add the interest only feature. But it's still a very cool feature we can add, and as Jose will explain here in a minute, it can definitely help us with qualification as well. Read your guidelines now. Not all loan programs allow us to qualify with the interest-only payment, but some do. So this can be a great hack to also raise the DSCR ratio, right? We are going to raise the cash flow because we're lowering the monthly payment to interest only. So we have a few different flavors of interest only. Let's go ahead and have you pull up the examples here, Jose. I'm not sure which flavors you picked, but let's go ahead and check it out if you're ready.
What flavor do you got, Jose?
Definitely not vanilla. Right? We're going outside the box here totally in what we're doing. Just the fact that we're in the DSCR realm, which is amazing. Totally love it. So as Nick was saying, besides being able to provide solutions for our borrowers with the DSCRs, we can also tweak it and go to the interest only option in situations where either A, the investor prefers interest only as an option because they on their own accord want to increase their cash flow, or B, the property doesn't cash flow with a fully amortizing payment, and you are submitting to an option which calculates the DSCR based on the interest only payment. Now, I will say Not every option out there calculates the DSCR based on the interest only payment. So it is very important when you are uh, factoring in this option that you make sure that that's actually what's going to happen. Luckily, we do have many options that calculate based on the interest only payment. There's more that do calculate the DSCR based on the interest only payment than those that don't. So rest assured, plenty of options there. Uh, in many cases, you'll probably save $200-300 a month, depending on the size of your loan, because what you will be saving is the principal payment. Now, do be aware that there is a loan level price adjustment when going the interest only route, and also know that not every DSCR option out there has an interest only option. So you will get a few less choices, especially if you're going 2 to 4 unit as opposed to just 1 unit. So as you tweak the property type and the amortization type, you will have less options. But luckily, we do have many options available. So here, our first option is a 1 unit purchase, 20% down. Now, the max LTV on the interest only option is 80% because our 15% down DSCR options do not allow for interest only. They probably figure that at 85% on a DSCR loan, they've already maxed the amount of risk. So in order to go interest only, you do have to put down at least 20%. So here we have some great options where we have 8.75 is actually above par, offering a little bit of a lender credit. And you can buy it down all the way to 7.5% as our lowest rate option. And this is for our 1 unit purchase. Our 2 unit purchase, same LTV, is offering the same rates. There is not a loan level price adjustment at an 80% to go 2 to 4 units, which is great, which shows you how special DSCR loans are, that they are pricing 1 unit and 2 to 4 units the same at an 80% LTV.
So what that really means is they find them actually the same risk, or possibly even less risky, when a investor has multiple rental units to rent on a property, which is
Absolutely.
which is more logical than conventional, I think.
Yeah, you're spreading the risk of not receiving payment amongst more units. So if you have 4 units, one of them doesn't pay, you still have payment from 3 of the units, right? A lot better than if 1 unit doesn't pay. And all you have is 1 unit, then you're out of pocket that month and you got to start evicting. So here on our 2 to 4 unit, again, same option, 8.75 with a $100 lender credit. That means that is an above par rate. And you can buy it down to 7.5% on our interest only 2 to 4 unit property purchase using DSCRs. Now, these are 30-year amortizations, by the way. Now we have a refinance of a 1 unit interest only at a 75% LTV, cash out. And here, little bit of a hit for going cash out, but not much because we dropped the LTV to 75%. So 8.875 actually offers a $563 lender credit, and you can buy that down all the way to 7.75% for our 1 unit property. And our 2 unit property, there is a little bit of a hit now, going 2 to 4 unit on the interest only cash out, 9.25 with lender credit, and you can buy that down to 7.99%. So compared to the 1 unit, So our rate there increased by about 0.375 of 1% on our 2 to 4 unit cash out. Now, some rate and term refis, interest only, again, 1 unit, and our max LTV on the rate and term refi is 80%. Okay, a little bit different pricing than with the purchases. So here you're looking at 9.75% with a little bit of a lender credit, and you can buy that down to 8.1% for our 1 unit rate and term refinance. Now our 2 to 4 unit rate and term refinance, again, 80% max LTV, same pricing here, 9.75% with a little bit of a lender credit, and you can buy that down to 8.125%, lowest rate option. And our last example here is a 40-year purchase, 40-year amortization. So this would be the ultimate. Now, keep in mind now, as we do go to 40-year interest only, again, it further reduces the available pool, but still we're getting excellent rate here, basically the same rate that we got for the 1 unit interest only at a 30-year amortization, 40-year amortization, same rate, 8.75 with a little bit of a lender credit, and you can buy that down all the way to 7.5%. So this option here would be the ultimate hack for the borrower who's having issues meeting the DSCR. Not only are we going interest only, but we are at a 40-year amortization. So looking at payment-wise here, our option here, 8.75, is a 29.17 payment. And if we go to our first quote, 29.17, that's interest only, actually. So that doesn't take into consideration our 40-year, which is going to be more for the borrower's long-term situation there when it does go fully amortizing payment. But again, 29.17, great option there.
So what you mean there is it's the first 10 years it's interest only always.
Correct.
Okay. So what we're looking at is the first 10 years payment there, not when it fully amortizes. So
Correct.
that's why you don't see a difference.
Yep.
All right. Don't see any questions here, so I guess we can close it out here, Carl.
Yeah, absolutely. Great products there. I think that's, like I was saying in the beginning, the best tools in your tool belt, right? Can do a lot of things with these programs. So remember, we do this show 11 a.m. Eastern every single weekday where we go through the rates and then do a deep dive into a different topic. So we'll have a new loan topic to go through tomorrow. Thank you, everybody, for tuning in. Thank you, Nick. Thank you, Jose. And we'll see you tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Everyone have a great day.
Thanks, everybody.
Have a great day, everybody.